Good morning, everyone. Thanks for joining the weekly research morning call. Today, we have a few stock counter updates, followed by the Euro Technical Pulse and Singapore Weekly. So without further ado, I'll hand over to Ambrish to present on Adobe.
Thank you, Meow Meow, and good morning, everyone. So last week, we released Adobe second quarter results with the title Pricing Too Much for AI. So Adobe, it's basically a cloud-based software company, and mainly because it's a software as a sales business model, it generates high gross margins as most of its revenue is recurring in nature. Overall, the second quarter results, they were within our expectations, with first half 2023 revenue and PATMI at 49% and 50% of our full year 2023 forecasts. In the second quarter, its total revenue, it grew by about nearly 10% to $4.8 billion US, and this was mainly because of higher subscription sales associated with its digital media and experience products. In terms of its bottom line, it generated a PATMI of $1.3 billion US, and after excluding non-cash expenses like stock-based compensation expenses and one-offs, it reported adjusted PATMI of $1.8 billion US. So moving on to the positives, Adobe, it reported its Creative Cloud segment revenue, which is a part of digital media segment. It jumped by about 9% year on year to $2.9 billion US. And net new Creative Cloud annualized recurring revenue was about $354 million. This was mainly because of surge in digital media content generation. And also the company, it mentioned that during the second quarter, it had released its generative AI tool, which is Firefly. And it said that there was a robust adoption for this particular tool, and users, they have generated about 500 million digital assets through its generative AI Firefly. And we will discuss more about its features on our next slide. So moving on to the second positive, Document Cloud revenue, it grew by about 11% to $659 million US. And it reported a net new annualized recurring revenue of about $116 million. And the jump in revenue is mainly because of shift to electronic processes, document work processes, as well as e-signature capabilities. Management highlighted that its Acrobat Web monthly active users, they grew by about 50% year on year. And this is mainly because of strong PDF consumption through its Chrome and Edge extensions. And it also reported that Acrobat is the default PDF viewer on Edge, which has about 1 billion users. So moving on to the negatives, Adobe's top line revenue in the second quarter, it was impacted by about $150 million due to the foreign exchange, negative foreign exchange currency impact. And this was about 12% of its PATMI. Next slide, please. Thank you. So to discuss about its generative AI Firefly, so it's currently under beta testing and it's free for its existing subscribers. So we will talk about the 4 key features for Firefly, and namely its text to image, generative fill, text effects, and extend image. So basically, a text to image, it's like the tool, it would auto generate image from the text descriptions that we provide. So as an example, we had typed in a man watching the sunset over the ocean. So these are the 4 images that its tool populated. And through generative fill, we can add objects to these particular image or remove them, or also change the clothes or colors of the subject when we select that through the text descriptions. Like on the second chart, second image, we have typed in denim jacket, and the color change from blue to white to blue denim. So going further for the third feature, it's text effect. So we can add a texture and styles to our text through text prompt. So on the right hand side, bottom image, we have mentioned to generate a text with using blue flowers and leaves. So these are the images that this was the image that was populated. And in terms of its fourth feature, which is extend image. So through this particular feature, the AI tool, it would automatically increase the aspect ratio of an image Like for example, we can enlarge a particular portrait image into a landscape while maintaining its quality of photo. So basically, Adobe, it's not the only player into the text to image category. It faces competition from competitors like DALL-E, which is from OpenAI, as well as Midjourney. However, Adobe, it mentions that the images that are generated through its AI-based tool, they are commercially safe mainly because they are populated from its Adobe stock database and publicly available sources. And as a result, it's like less likely to face any copyright issues. Next slide, please. So moving on to the outlook for Adobe's third quarter, it expects revenue to grow by about 10% year on year to about 4.85 billion US dollars at the midpoint. And it expects its GAAP earnings per share to grow by about 18% year on year to $2.85. Meanwhile, for its full year 2023 outlook, it raised its outlook for revenue from about $19.2 to 19.3 billion US dollars. And it also increased its profitability from like $11 to $11.20. Meanwhile, the company management, it also increased its net new digital media annualized recurring revenue to $1.75 billion from $1.70 billion. And this is mainly because the company, it believes that its generative AI tool, it should expand its demand for its creative cloud applications. However, we believe that the AI-driven revenues, they should be modest in the second half of 2023. And this is mainly because the AI, it's currently under the initial stages and company is yet to finalize its monetization plan. Like currently it's free for everyone and it's still yet to finalize that how can it generate revenue. And in terms of its valuation, we have downgraded Adobe from accumulate to reduce mainly because the stock has run up over the recent times. Just as an example, its market cap, it has increased by about $50 billion over the last month. And this is significantly high. Like if we assume that even if Creative Cloud revenues, they double due to the Firefly tool, it should generate an incremental profit opportunity for the company, like just about $3 billion. And as a result, we have downgraded the stock. And however, we have increased the target price to $435 from $402, mainly because we have increased full year 2023 revenue and pattern expectations by about 1% and 2%, mainly because of a rising digital media content as well as shift to digital workflows. So that's all for Adobe. I would now like to pass on to Marcus for Comba. Thank you.
Thank you, Ambrish. So I'll be going through Phillip on the ground for Comba Telecom. So Comba Telecom is currently trading, it's not rated, but it's currently trading at 24 cents SGD with a market cap of $680 million. So they mainly focus on the R&D and manufacturing and sale of telco network system equipment. So if you think of the antennas that the big telco companies in China are using, usually Comba would be one of the few operators behind it. So in the past year, their revenue grew by 8.4% year on year, which is quite a record high, based on the record high number of base station antenna products. Because the companies managed to succeed in acquiring the tenders required by many of the procurement of the antenna products in mainland China and internationally, which contributed a lot to the order numbers. So in addition to that, the past few years, they have invested quite a lot in terms of R&D. Most of these successful projects allows Comba to improve the efficiency of their products by effectively reducing the energy costs for customers and OPEX for operators. And in addition to that, they also been focusing on Open RAN. So Open RAN is basically Comba working with global operators like you think Vodafone to improve network quality and optimize network efficiency to similarly minimize total cost of ownership for 5G products. So working with all these operators would effectively allow access to the broader international network system markets. So tapping onto that, they have also announced back in 2021 the proposed listing of the 80% owned subsidiary Comba Network, on the STAR market, which is in short for SSE SI Tech Board in the Shanghai Stock Exchange, that mainly focuses on high-tech and emerging sectors. So Comba Network is the network systems product arm of Comba. To add on, in addition to that, in 2021, their net loss was $101 million, largely was due to provisions for inventory and receivables. So if we exclude these special items, their net loss and income for 2021 and 2022 would be significantly lower at 17.3 million and 46 million respectively. So moving forward, management has guided that their order book is looking quite healthy leading into first half of 2023, mainly driven by the base station antenna segment, as well as the international market segment for network systems. And in addition to that, they sound upbeat on the potential to improve their margin potential across the revenue segments in international markets. So with that, I would like to pass to Peggy to go through Phillip on the ground for Zixin. Thank you.
Thank you, Marcus. We visited Zixin Group Holdings last week. We met with the management. Okay, this is non-rated. The current share price is 1.9 cents. Okay, the market cap is 26 million Sing dollars, a very small number. And they are into sweet potato cultivation and downstream snack production in Fujian PRC. Okay, they actually started out as a snack food producer with their own proprietary brand and distribution network. And over time, they last 2 years they went upstream to procure sweet potato cultivation by contract farming with farmers. And recently, they have also broadened themselves into seedling nursery. And these are also sweet potato seedling, and go downstream into waste recycling to produce animal feeds through by recycling the leaves, the stems, and all the peels and so on. So the new plant for this waste recycling will be operational by second half of 24. Their year end is March, so second half of 24 is second half, actually the second part of this year. They what's interesting is that CITIC Construction, CITIC is a state-owned company. CITIC Construction has invited them to do a joint venture together with 2 other partners to replicate their work in Hainan province. And potentially the land area in Hainan is about 10 times the size of what they have in Fujian right now. And this will replicate their revenue model in Fujian. The initial state of investment for them will be very small because CITIC will take the bulk of the initial construction of laying out the ground for sweet potato production. But the second phase, where they go into snack food production, as well as the downstream waste recycling, that will see Zixin taking a bigger stake in that venture. And they had a net loss last year of 14.2 million RMB. It was due to the COVID restrictions that hurts the supply. Therefore, some of the harvest could not take place. Then the sweet potato were actually rotting in the ground. And there's also impeded their delivery system, and they could not send the products out to the network. Like that, so management expects that they will be able to turn in a profit in FY24. The valuation is at 0.3 times price to book. The share price is actually below the cash per share of 2.1 cents, Sing cents. So because of that, we arrive at a negative enterprise value, and that leads to a negative EV/EBITDA of 2.2 times. So EBITDA is actually positive, but because numerator is negative, so the ratio turned out to be a negative. So that's all I have for Zixin. I'll move on to Singapore Airlines. We reinitiated coverage on Singapore Airlines. It's a reduced call with a target price of $6.80. Compare with add on to the 20 cents dividend we expect for this coming year. This is still 6% below the last done price of $7.41. And that that's the reason for our reduced call. They had an exceptional year in FY23. But 24-25, next 2 years, we expect a 19% and a 40% decline in net profit. As passenger loads and the yields taper off. We expect the net cash outflow in FY24. They are going to, this week they will redeem the 50% of the remaining MCB, military convertible bonds. They also will be starting to invest in capex to bring in the new aircraft. This is a aircraft renewal program. They will also be investing in the merged entity of Vistara and Air India. The merger has yet to be completed, but they will spend up to 880 million to pump into this merged entity. So with that, we think the dividend will be cut going forward to about 20 cents for FY24 from 38 cents in 23. So the price now is still come dividend. So after it goes ex-dividend 38 cents, they will adjust. And the air cargo demand are expected to fall in the next 2 years. According to IATA data, first 4 months of this year to date, industry-wide cargo volume has already fell by 10%. And air cargo faced rising competition from sea freight. Air cargo's the rates are still about 40% above pre-pandemic level. But sea freight actually is only about 8% higher than pre-pandemic level. So they're becoming more attractive, and there's less congestion in the sea right now at the ports. So the shippers are opting for the cheaper alternative, which is sea freight. And overall, also we expect a slower global trade going forward. The potential merger of Vistara, which they own 49%, and Air India will result in them writing a book gain of 1.1 billion. Call this a book gain because there's no cash involved. How they arrive at 1.1 billion, this is the amount that SIA has invested in Vistara since 2013. And Vistara has been loss-making, so they have been writing down this amount. So now with this merger, they are able to write back this accounting entry, some accounting standards that's very difficult to make sense sometimes. Okay, so the merged entity is still in the red in first half 23. And with a 25% stake, SIA is going to pump in 360 million to raise their stake to 25%. Then they will start to have to recognize their share of profit or loss. So if this merged entity is a loss, then going forward, you'll get a share of this loss in their books. So we have not factored in this 1.1 billion gain and the potential recognition of equity accounting for their share in our numbers. So our call is reduced with a target price of 680. We base it on 1.1 times price to book. For FY24, the price to book, our estimate is $5.94. Why 1.1 times? Because our forecast over the next few years, we think the sustainable ROE for SIA is about 8%. And based on a cost of equity of 7%, that's how we arrive at 1.1 times. Just a deeper dive into the numbers. The next slide, please. Thanks. Okay, this is the SIA's capacity. They have already planned to move it up to 83% of pre-pandemic level by the end of September this year. So we think by by March next year, that should be nearly hit full capacity, full back to pre-pandemic level. But most of this capacity increase and also the load increase that you see in the chart here was probably also driven by the budget airline, the low-cost carrier Scoot. And as you would imagine, Scoot delivers a lower yield for SIA. On the right-hand side, the cargo loads are expected to fall in line with the market trend. Everybody else in the industries are facing the same. And not helping is that the capacity in the industry is actually growing. Why so? Because the passenger flights are they add belly hold capacity, which is classified as cargo capacity. So there's reason why the cargo capacity can be rising at such a fast rate, even though the demand is not there, not growing. Next slide. So Mel, can you move to the next slide, please? Thanks. Okay, so on the yield side, yield is how much they make from every kilometer passenger that they move the airplanes. The yields are expected to fall. One thing that is you might ask why the yield doesn't seem to be falling so much is because there will be a change in route mix to a shorter haul routes. Shorter haul routes are typically command higher yield, but yeah, but the costs is also relatively higher. And they on the cargo side, they face competition, so we're projecting that the yield to fall even at a faster rate, while cost remains quite relatively stable. Next slide, please. See, this is just a comparison. The threat from the regional carriers. Just take Cathay Pacific as an example, because it's one of the slowest to return to the market. But it has been coming back very quickly. Year to date, up to May this year, the capacity is already 77% higher than the whole of last year. And it's now about 40% in the month of May, so back to about 40% of pre-pandemic level. So they are able to bring it back the capacity very quickly. Only limitation could be the staff or crew, but that is this is a problem faced by all other airlines. So we see that it will resolve over time, or the whole industry will feel the same impact. Okay. And the CS Cargo is also facing the same kind of scenario as the rest of the other carriers. So the China Airlines are also slow to bring back the capacity on the international route. Although as a whole, they have already brought back the domestic route up to 20% above the pre-pandemic level. The international route for the China Airlines are still about less than 30%. For the 3 China Airlines that are listed, less than 30% of the pre-pandemic level. So when these airlines bring back the capacity, there's a lot of competition to contend with. That's all I have for Singapore Airlines. I'll pass it on to Zane for the technical. Thank you, Zane. Thanks.
Thanks, Peggy. Good morning, everyone. So now I'll move on to the technicals. For S&P 500, last week we saw a pullback. We actually looks like gonna retest the 4,300 resistance level breakout. So let's see whether this week we're able to hold this level for a possible continuation of the uptrend. So for now, the current resistance will be likely at 4,400, which was the recent highs, to about 4,500, which is the uptrend channel resistance shown in the chart. As for the current immediate support, is likely to be between 4,250 to about 4,320, which is the recent resistance levels that we broke out of in May this year. Next slide. For individual stock counters, we have Zixin. So for this, it's a technical buy at 163 with TP at 171 and 180. Stop loss can be placed at 159 and the stop loss close at 164 on Friday. So for Zixin, there's a retest of the previous resistances. So previously, when looking at the chart, 163 was a very strong resistance over here. So after the price went up and subsequently came back down recently, we found support at that level, coupled with also support from the uptrend support line. So with that, with also a positive crossover in MACD, we could see a possible reversal in the momentum from bearish to bullish. So we've said the price could retest 171 first as the first resistance level, which was a support that we broke down in early part of May this year, and subsequently could retest 180, which is the next swing high level created this year. So that's all from me. I'll pass my time to Paul to talk about Singapore Weekly.
Thanks, Zane. So we move on to Singapore Weekly, some of the key macro news that was released last week. So for Singapore, as what was mentioned by Peggy, there was Changi Air Cargo. This is not specific to SIA, but I guess majority is SIA. So air cargo continues to decline. It was down 7%. This is probably the 8 or 9 month of decline year on year. Year to date is also down 8.4%. The other news we had in Singapore was the core CPI. I think apart from affecting us as consumer, I think the most for investment purposes, I think it is core CPI most important is whether it matches with MAS expectations. So MAS expectations for 2023 is 3.5 to 4.5. So the current levels are, although it's declining, but it is still way above MAS expectations. Although they think the core inflation will dip down. So if it continues to persist, then there is possibility maybe the MAS might tighten a bit more, but it's unclear because they have to balance with the weaker economic conditions. But I mean, just for interest, if you want to know what's moving the CPI or inflation, it's mainly food and recreation, which is recreation here is actually holidays. But anyway, the other key thing is central banks. So the big news for last week was mainly a lot of central banks raised rates. We're getting this global synchronized increase in rates. The headlines was coming mainly from the UK, 50 basis, Norway also 50 basis, then Switzerland 25. But against the trend, what we think is that running against the economic cycle where most monetary conditions are tightening, but in China instead they are actually loosening up. So they actually cut their prime lending rate by 10 basis points, which isn't much. I mean, not like a celebratory or a huge cut, but I guess trend-wise they are expecting more rate cuts from China. Prime lending rate means this is the rate the banks lend to their best clients. In the same time, they also cut their medium-term lending the prior week, which is basically what the central bank lends to the banks. But I think the key difference here is that while most developed countries are tightening, in China is the opposite. It's actually loosening. So I guess in terms of an economic cycle, we think it's a better position compared to the other developed countries. In the US, I think Powell was all over in the news. He was doing his usual 6 months briefing to the Congress. So for that, it's quite clear that there is going to be likely another rate hike in July. So some of the key statements by Powell was that there are still a long way to go to hit their 2%. So obviously they need to tighten more. And I guess the more clearer statement was that they say it's appropriate to raise rates further by the end of the year. So most likely July, there'll be one more rate hike. And just to further add, the likelihood is that a fellow FOMC member, Bauman, she also said that there will be an additional rate increase will be necessary. So I think it's pretty well telegraphed. Then in terms of other news, I think in the US, we're beginning to see the impact of higher rates. Home prices have started to decline. So largest percentage drop in existing home sales in more than 11 years. Next slide. So what does this mean for us, at least tactically? So what we see is that there's a developed countries are still raising rates to tame inflation. So this scenario basically means is that inflation is running higher and longer than what we're expecting. And this is negative for global economy. So what it means is that if inflation continues to run hot, number one, there could be a wage spiral. That means just to get down a bit to the weeds, I mean, workers might want to have higher pay because inflation continues to run high, and this could have a negative spiral effect. The second risk is, of course, higher risk will just cause weakness in housing prices and so forth, like we saw in the US. And this will also, again, have a wealth effect and also cut down on consumption, broadly speaking. So this will only exacerbate the current economic conditions. But for China, what we see is the opposite trajectory. And we think it's a much more favorable condition. Firstly, China, we think is recovering from post-COVID, although it is still progressing. It is weaker than what market expectations, but at least compared to last year when there were lots of shutdowns, you will still see this base effect of a recovery. And unlike other countries, China is still undergoing a monetary stimulus. And there are plans for fiscal stimulus likely targeted at the property and consumer sector. As we highlighted before, I mean, buying, if you're bullish on China, buying it through Singapore is probably not the best idea out there, but we think some of the stocks that will benefit from a China recovery would be, CapitaLand Investment, and also we recently initiated a SIA REIT. For some of the events that's coming up, the key one will be again Powell will. I'm not sure why it's coming up so many times, but anyway, this week he'll be in another panel with other central banks, and they will probably get some commentary from him. But we can only assume he'll be hawkish. I mean, just since he just mentioned he's hawkish. I mean, the last week. The other key news is the core PCE that's coming up. So that we don't expect any major change in there. So the next meeting will be, I think, 20-something of July. So unless we got some miraculous drop in inflation, we think there will be another rate hike coming in July. On the 28th, we have two events. We have United Hampshire REIT, and also we have iREIT Global. For those who are interested, now one is US and the other one is Europe. Next slide. So just to show you, the European central banks are still tightening. So even like on the left, again, this is just for your understanding purposes only. Like, so you can see that Norway has to raise rates because inflation suddenly spiked up so high. This is in rate, and it doesn't seem to be slowing down unlike in the US. And even though they've raised rates, there's still a lot of room to catch up because usually the blue line interest rates tend to be higher than inflation. But you can still see that they are still playing, there's still a lot of room to catch up. It means inflation is getting stickier and harder to tame than expected. Switzerland also, but a bit more curious for that, the inflation is actually coming down. Next slide. But the one that took the most of the news was UK. So the problem that UK has is the yellow line, core inflation, which continues to climb to a record high. So thankfully, this is not happening in the US. It's slowing down, but because of that, the UK is in a tougher spot. They need to raise rates, and you get this, probably going to see this negative wage spiral. And then employees will want higher wages to compensate for what they lost. And then this will spiral out of control. I mean, if they don't tame this down. So that's the predicament UK has. The only good thing for this red line is that ComfortDelGro will reprice most of their contracts based on the CPI. But unlike other developed countries, our point here is that China, in contrast to all these countries, are actually cutting rates. So they did their first rate cut after 10 months. We think there should be more. I mean, 10 basis points is almost meaningless. It's like doesn't really impact much, but maybe it's to protect the bank margins there. But we should expect more rate cuts, and this should be stimulative for the Chinese economy. I think that's it for us. I think we can move on to questions. Yeah, thanks. Okay, let me just take this one first. For is Jardine Cycle and Carriage and Netlink Trust a good income stock to hold in the core portfolio? For income, I think let's say let me start with Netlink Trust. So we have coverage. For Netlink Trust, it is they are paying a dividend yield of 6%. We think the yield can sustain at least up to 2025, then it becomes a bit more precarious for them. Why we say that is that Netlink pays about 200 million in dividends a year. But one thing, the reason was that they have about 700 million of debt. 600 million, they managed to fix it at an incredible around 1% for up to 2026. So when 2026 happens, that's when they have to kind of reprice their interest rates for that batch of loan. The impact could be, if you take a 2 percentage points on 600, you're talking about 12 million to 18 million. So this could hurt their dividends by 6 to 9%. So up to 2025, we think they can maintain dividends. Then it gets a bit trickier by 2026 because there will be a refinancing of their loan. But they're definitely, but if you want a yield between 5 to 6%, then I think definitely defendable because Netlink, most of their revenue comes from fiber connections. The 1380, they charge all the telcos for fiber, or which basically all of us pay, all the households pay, and they got like 1.4 million subscribers. So defensive in that nature. Just that by 2026, they're a bit more wary. Hopefully, interest rate gets cut, then that should get some relief for them. In terms of Jardine Cycle Carriage, that's a bit tougher because I think 70% of their profit or more comes from Astra. So I wouldn't call that an income stock because when you buy Jardine Second Carriage, you're essentially buying Astra International, the Indonesian company. So the dividends there are a bit more volatile. I think for this year, looking at the results, the dividends was up 40% because the results. So I don't think Jardine Second Carriage is more of a dividend, stable dividend income. You're basically buying Astra, and that's cyclical because they sell motor vehicles, and they're dependent on Indonesian consumer and also the mining sector because they also sell a lot of tractors and so forth. Yeah, thanks. I hope that helps. Okay, let me just try this. Many countries raise rates to reduce inflation. Are there any other ways to manage inflation? There's really not many other ways. That you just have to kind of contract, because most of this, like for the UK, most of this is imported inflation. According to them, 70% is imported inflation. So the only way is really just to raise rates. It's a very blunt instrument. You can also have price controls, but that's only temporarily. So there's not many instruments. You just have to contract the economy, and that's the only way to what. And it's a very blunt, because even though you collapse the economy in the UK, it doesn't mean commodity prices will drop. So it's a very blunt instrument. But slowing down the economy is the only way to contain inflation. And the worst case for the UK, I mean, not I expect UK, but worst case is that they've actually had a price cap on electricity, and even then, also inflation is still hard to contain, because this is core inflation, and this many not to become an economist here, but core inflation depend a lot on services, because it's all wages. Most of it is wages and very domestically driven. Yeah, and I hope that helps. How will the M1, M2, and M3 impact the stock market? We've never really done one for the US, but for Singapore, it doesn't really have much of an impact, because actually M2 in Singapore is actually surging very strongly because there's a lot of inflows. But you can see, there's also a lot of leakage. It doesn't mean for Singapore in particular, the surge in M2 or M2 means money supply, doesn't really benefit or has a direct link to Singapore market, because there's a lot of leakages. I was just looking at the number, I think a few days ago, because the MAS changed the way they do M2, M3 computation, but the impact to the market, not much, because people just can buy US stocks and so forth. So the impact is not much. We haven't done one for the US, so there's something which maybe you can ask. We'll probably do another topical one for Zane. So just as a side note, Zane, our technical analyst, also will do some topical reports. For instance, whether do you sell in May and so forth. So do look out for that. So thanks for the question. We will probably use this as another topical report to do. We'll look at the data and see whether there's any relationship between money supply and the US stock market. Thanks for the question. Given the hawkish tone from Powell, do you expect Singapore REITs and property stocks to continue to underperform? Okay, and Darren is not in our REIT analyst. I'll just try to explain a little bit. So we still are upbeat on Singapore REITs, especially those that are trading below book. One comes to mind, which is Suntec. The reason why we say that is that the commercial property price in Singapore hasn't really come off. It's actually very stable. Of course, there's not much of a very strong logic here because interest rates are up, but there's a lot of bidding activity in Singapore. So commercial property price in Singapore has been much more stable than expected. So that's why we still think REITs are still healthy, especially if we think the global environment is going to slow down. So if you want to play defensive, then I think Singapore REITs will be one area. And on the property market, yeah, I think it's definitely going to be slow for the high end. And the problem for the developers is that even if it runs up, then there's another risk of intervention. So there's very little room to grow for a lot of these property counters. So our comments to all the property developers is always to try and give because most of the property developers have kind of reinvented themselves to own a lot of commercial property. If you look like someone like Gokko Land and so forth. So what we always told developers is that if you can give the investor a strong, stable, recurring income, maybe from all the rents you collect from commercial property, that can give an investor maybe 4 or 5 or even 6% dividend yield, and then the rest is development profit. Then that will be a more interesting stock to buy, because price discount to NAV doesn't really work these days. I think investors don't really care about discount to our NAV. So that's our view. But we are going for a Lentor residence visit. So we'll probably give an update. There's a new launch by Gokko Land. So we're going there, then we will probably give an update for investors to for the following Monday. Yeah. Sorry, I'm babbling along. Yeah. Can some take some of the questions? I've got so many here. Yeah, thanks.
I'll take this. I saw a question on sets. I think I saw a question on sets. Yeah. Outlook of sets. Okay. Okay. They had for sets. Probably nothing much to look out for first quarter earnings. The year end is in March every year. So the first quarter will be end of June. We think because they recently redeemed all the two notes at the WFS. The redemption will cost them about 37 million Sing dollar, according to my estimates. So they might have to book this as a cost to their P&L from first quarter. And also from first quarter this year, from April this year, they start to consolidate WFS. Consolidate means include their profit and loss, also include the debt at WFS. So and then that means the financing cost for sets will also rise. They redeem the bonds at WFS, which at an average about a cost about 7%, and they refinance it at a cost about 4.5%. So longer term, it will help sets to reduce their interest cost, but it will not happen in FY24 because of this redemption premium that they pay. So the FY24 might be a year you can not exciting for them. The other reason why I say so is cargo volume is on the decline, and WFS is very big in cargo. So with the consolidation of WFS, cargo will account for more than 50% of sets earnings. Yeah, and more than 50% of sets earnings. And the one positive to look out for sets is China, because China contributed about 9% to revenue last year. This contribution should rise as China reopen. They have three locations in China: Tianjin, Nanjing, Weizhou, and Beijing. The one in Beijing is not great because the Beijing airport has been a lot of the flights have been taken over by the new Daxing airport, which opened up. So the volume has shrunk. But for Tianjin and Nanjing, Weizhou, those are coming up. So we really pray hard that China can open up quickly their international flights. So the sets will benefit from that. Otherwise, it's going to be not an exciting quarter for sets for the June quarter. I hope I answer the question. If not, please drop the question again. I'll try. Thanks. Okay, there's another question on C-trim. So maybe I attend that one. The question is, C-trim in STI index recently, how does this fundamental look now? Will a penalty from Brazil impact it significantly? You're right, C-trim is now in STI index, but I don't think that helps very much in terms of the fundamentals. The Keppel continues to be a seller, we believe, as it will start to trim its 5% stake in C-trim. It has already started and is gradually doing that. Recall that the cost in their books is 12.2 cents. So anything above 12.2, they are going to book again, and that might be reflected in Keppel's P&L. The gain will be reflected in P&L. The fundamental hasn't changed. It's still very much conditional on the outlook of the oil price and the rig count. We monitor the rig count to gauge how willing the oil majors are, how the willingness of the oil majors to spend in drilling and exploration. So the rig count numbers have been on the decline in the week-on-week basis also. But then these numbers, week-on-week basis, is quite difficult to tell a trend. But we'll watch it and see how it goes. But so far it's been down week-on-week. We're not sure even whether Brazil will set a penalty or even whether Singapore side will fine them as well. But what we worry more is that this investigation and into a corruption case will drag on. That will impact their ability to secure new orders, or even to their ability to perform their work on the existing orders in their order book. So we didn't see a strong case to invest in C-trim in the currently. Thank you. There's a question on Keppel. Let me try this. What are your views on Keppel Corp? FA? Oh, fundamental analysis, I guess. Yeah. Okay. The Keppel's valuation is very dependent on the value of their China properties, on the property portfolio, and China accounts for a big part of that. China and then Vietnam. So if China property can recover, then they can launch the number of units as they plan. Then there will be a bigger they might surprise us on our earnings numbers. But otherwise, the other key factor that would drive Keppel's numbers is the energy, the price of energy, and as you would know, Keppel and Sembcorp are our two big so-called energy play in the Singapore market. So the energy price, how it trend up, will determine Keppel's outlook. But so far, the news that we received in the last 2 weeks were that the EMA is very keen, very determined to make sure that business costs remains contained and acceptable for businesses. So they are imposing a temporary cap on the price cap on energy from beginning of 1st of July, which is like this weekend. So we don't see any positive catalysts coming out in the near term for Keppel, unless we see an upturn in the property sector in China, or any upsurge in the energy prices or oil prices. Thank you. There's a question from on Sembcorp. What are your views on Sembcorp industry? Rising interest rates seems to be helping SCI. Will this continue? Sembcorp is a everything about energy story. The energy accounts for like 80% of their P&L. But both conventional and renewable. So they had already hit they already hit their renewable energy target for 2025, which is 10 gigawatts. So they are coming out we are expecting them to announce a new target going forward. So that might be a catalyst for revision in the share price upwards. The rising interest rate seems to be helping SCI. I don't see how this can this will help, but definitely because of the tight because of the hot weather right now, even the UK power plant power capacity has been called back to supply energy. So they see some additional gains from all this standby capacity that they have installed in other countries. Rising interest rate might not help them actually, because their gearing is high, and they sold their Indian assets, conventional energy power plant, but in return they take deferred payment notes. So these deferred payment notes had a interest rate pegged to it, and this if the interest rate rise, it actually shrink the margin on this interest rate. So it probably doesn't benefit SCI as much. Yeah. So I don't really agree with this statement. Thank you.
Okay, let me forget. I'm not sure this one. Sense Time is dealing with. Let me just clear everything, then pass it back to you. Sense Time is dealing with the AI. AI and China stocks. Do you have any research on this? Yeah, so sorry. We don't really have that because we don't cover China. We have to refer to our Hong Kong counterparts. Paul, any view on whether the short-lived Russia mutiny has any impact on European markets? For me, I think there might be a short-term relief thinking that it might weaken him, but I think it's for me at least, I'm not a Russian expert, but it will be a negative in the sense of, because what you want is ultimately just some peace deal in Ukraine, and then this will lift the whole it will lift the financial markets. But with a mutiny there, I don't think this makes it come closer to any peace deal. Maybe the Ukrainians think they have an edge now and push forward. Then at the same time, yeah, you're not sure, and they will want to push forward thinking that he might be weakened. So and also, even if you replace him, who is next? Yeah, who will be the replacement? It creates a lot more uncertainty. So for me, I don't think this. If there was a mutiny, I don't think it would have been a positive thing. Might benefit some short-lived sentiment. Yeah. Again, I'm not a European expert, but I just didn't think that it would be a positive. Ultimately, the ultimate objective is some peace deal. Anything that doesn't move in that direction is a negative. Yeah, I mean, that's my own view. Synte Energy. Yeah, sorry, China stocks. We don't really have a view. We don't cover. Thanks. Sorry for that. Yeah. I read preferential offer. Any opinions on whether to subscribe? I don't think it's going to make much of a difference because you're only getting, I was checking the stats, 161 for every 1,000. So the theoretical extract price, so assuming you don't take up the offer, the share price now is 435. The preferential, I think, is 40.8 cents. If you do the theoretical extract price, that means assuming you don't take it up, then once X this preferential offer, the share price will only drop to 43.1 cents. So for all the effort to get subscribed, I don't think it's going to make much of a difference. It will drop from 4.3 to 4.31. Yeah, so not much difference from the current share price. So it won't disadvantage the shareholder that much, even if you don't take it up. Again, that's just my view, because if you do the maths behind it, the computation. because most important when you do any rights issue, I think most of us know, but just to remind everyone, is the theoretical ex-rights price. That means after the rights issue, how much will the share price come down? Because if you don't take it, you'll be disadvantaged. So the impact is only like 0.004, I think, based on my computation. Paul, your view on Del Monte going forward and the price? Yeah, we think the next 2 quarters is going to be tough for Del Monte. Okay, so Del Monte issue was that so number one, which also caught us off guard, was that the high cost of the inventory. So now they have like a 1 billion of inventory compared to a year ago about 700 million, and the margins collapsed because they were benefiting from the lower cost inventory until recently they replenished everything. So moving forward, the upside will be when they raise. So Del Monte has 2 business. There's the US and Philippines. So the US will benefit because they're going to raise price by, I think, 6%, and it will be effective in August. So until then, the next 1-2 quarters, the earnings will still be weak because the margins won't improve because you're still having the high cost inventory. Philippines, they are not announcing any price adjustment. They are looking at it, but I don't think they can because the whole Philippine economy is pretty weak. So that's why the margins we think will still be weak for the next 1-2 quarters. Then the third is that the balance sheet, that they still need to resolve the high debt that they have because of the high inventory. They said they can only bring down inventory by 100 to 150 million, which isn't enough because considering the year ago 700 million. So the next 2 quarters is still going to be tough for them. Branding wise, position, everything, they are still very strong. There's like in Philippines, they are still the number 1, 80-90% market share for their canned food and sauces and so forth. But in the US, they are still very strong. It's just that they didn't reprice their products fast enough. Just to give you a sense, they also mentioned that because of inflation, the US operations had incremental 150 million incremental costs. So raising prices was just try to keep the margin stable. So the impact of inflation, especially aluminum, because they're doing a lot of canned food, was much more severe than expected. Please comment on ventures, technology, venture corp is called Singapore company. Yep. So for venture, there's another question here. Let me just join. Is venture manufacturing a good stock to hold for income? Oh, okay, just to give you a sense, I think the next 1-2 quarters, the earnings will be weak. When we were at the recent briefing, I think the emphasis was just to collect dividends. So basically, I guess it's probably just to suggest that the earnings won't be that great for the next 1-2 quarters. That's our own impression. They are paying a 75 cents dividend, so that gives them, I think, a yield of about 5%. And that one that dividend definitely can sustain because they got almost 1 billion of net cash. So you just have to, if you're buying now, my only worry is that when the weak results come out, there might be a knee jerk like we mentioned 2 weeks ago. It's better to wait until the upcoming results. When you see weak results, then to just flush out whatever selling there is. But they will definitely defend the dividends. I mean, there's no reason not to because they got like I said, 900 or 1 billion of cash. So we think they will maintain the dividends. It's just that the big earnings might cause another leg down. That's my only worry. Then that we think will be the appropriate time to get into the stock. I mean, if you're getting a yield about 6%, I think it's fine. And I guess the only chance you can buy this stock at these levels is when there's a cyclical weakness in the business. Paul, for ComfortDelGro, good 2 weeks rise. Is it sustainable recovery? Any factors to help the recovery sustain? Yeah, I think it went up because there was news of Zixin, their app, they're raising the fees. I think 70 cents. I think everyone saw that. So for us, I know I won't call me Mr. Comfort, but anyway, the 2 reasons why we think we still like it, because we think the fundamentals are still improving. Again, the volumes for rail is still growing. So for Comfort, there are like 3 parts of the business. There's taxi. So taxi in Singapore will do well because they just raised the fees, and also they also reduced the rebate from 15 to 10%. So all this will help because all this goes straight to the bottom line. So that's for taxis, and their taxi fleet is starting to stable after many years. I'm not sure how long it can, but at least at the very least it's stabilizing now. And taxi do well because right now, even Gojek wants to work with them because there's just a shortage of drivers now. So no longer who has the car, now who has the driver, and for some reason other Comfort still have the taxi drivers. The second, and of course with China, they were also hit last year because they had to give a lot of rebates in China. So that was, when with China reopening, that will also help the taxi business. The second part of the business is the bus and rail. Bus has been weak in Singapore because they recontracted lower. But rail is doing well because of volume. So we think that is stable. Then the overseas, it takes time. So the overseas, UK and Australia was hit very bad because of they had to renegotiate the bus drivers. I guess it's the typical what's happening in which spiraling out of control in the UK. So, not out of control, I guess, less better than expected. So that's why we think the income recovery will still be there, and the balance sheet, pre-pandemic, I think they had a net cash about 70 million. Then right now their net cash is about 700 million. So it's both earnings recovery and a stronger balance sheet. So that of course it should have been better to just buy SIA. So we were wrong in that sense. We wanted to play the safer transport stock, but that was the wrong one. I think SIA was obviously the better. So apologies for that. Yeah, but we still like it because we think the fundamentals are still intact. How does Singapore control inflation? Under what circumstances can UK style runaway inflation hit our shores? So for Singapore, we control inflation mainly by the exchange rate. I think this is the MAS policy. Part of it also flows through to the interest rate because the MAS actually does come in to intervene. What circumstance to I think for us is all imported inflation. I think our economy is so open, right? Yeah, so most of it comes from food. So it's nothing. I think there's very little we can do because our economy is so small. So it is based on global commodity prices that will dictate where our inflation goes. Because like you can see, most of the inflation right now in Singapore comes from food and commodity related. Yeah. So that's why, like we mentioned, the other important indicator is oil price. If oil price suddenly spike up for whatever reason, then I think the global markets will all collapse because everyone going to raise interest rates even more. But for Singapore, there's not much. Our economy is so open, so the external environment will dictate inflation for us, and not so much us. Yeah. Okay. Any updated views on property markets and prospects of Pronext? Initially, we thought that there will be a year of growth for this year, but with the cooling measures, I think this year will just be a stable. Earnings will just be flat for both. We think because the launches has still been pretty robust, so we think it will be earnings flat. But for Pronext, the difference for them is that they always mention they want to be an income yielding stock. So although they've never explicitly mentioned, I think they try to keep their dividend yield about maybe at least 5 to 6%. So that's why investors have kind of warmed up to this stock because they've always been quite explicit that they want to become a dividend yielding stock. And they have about 150 million cash to maintain the dividend. I don't have just off the top of my head, is about 50 million, which they can collect most of from their operating cash flows. And they got another 150 million cash to support if there's any particular shortfall. So Pronext is merely just a dividend yielding stock. But this year, we think the earnings will just be flat. We thought there'll be growth, but the cooling measures kind of dampened that. Okay, from Phillip Stock Analytics, you have target price and potential upside. This is not from us actually. Actually, how accurate is this info? By when can they reach your target price? Yeah. Some of these are ours. For us, our target price is always a rolling 12 months. So that's how we get our target price. Yeah, okay. And then the question is, appears that most of the stocks that I have, they are recently mostly on the upside in your analysis. Yeah. So bear in mind, when we initiate a stock, we usually like it, then only we will initiate. Otherwise, we won't do it. Apart from recently Peggy. So we rarely do initiate with a reduce. There are there are effectively, I think, only 500 stocks in Singapore listed in SGX. Although the data says 600, most of them are already suspended or pending delisting. Anyway, so there's about 500 listed stocks. So we will only initiate those that we like. So that's why you will see the target price is always higher. Otherwise, we won't. Otherwise, to initiate a stock, it takes a lot of effort because we have to build models. You spend hours and hours, or even weeks to initiate one stock. So we only will initiate it if we kind of like it. Otherwise, we won't do it. Yeah. And when usually we have a rolling 12 months for the target price, but it depends. As Phillip Stock Analytics is not managed by us. I think some of these target price might be coming from from the Poland's team. I think they collate it from other brokers maybe. Yeah. So not all of the Phillip Stock Analytics comes from us. Okay. Okay. Let me just take one last one before I move on. So outlook for Fraser Hospitality Trust. So for us, we still like hospitality in Singapore, especially. When we look at the data coming out from China, outbound traffic, from the airlines outbound traffic, right now in China, outbound is only 15% of pre-pandemic. So the domestic travel has back to pre-pandemic. So what we think is that the first wave of travel for the Chinese the Chinese population has been to move to do domestic travel, because you probably haven't visited your relatives for years. So I'm just saying. So the first wave we think is domestic travel, but the next wave we think will be international traffic. So this is only 15%, and like Peggy mentioned, it's also because they didn't have enough the capacity, airline capacity yeah. So right now we think that will be the next wave for the hospitality industry in Singapore. So that's why we still like hospitality in general, especially in Singapore, because we can monitor the data better. So right now things are still progressing because there'll be a next wave, and not to mention all the various concerts that is also helping Singapore becoming a tourism hub, I guess, for entertainment. Yeah. Okay, I'm not sure if the rest can take on. Yeah, thanks.
Hi, I'll take the question for Capital DC, but I'm not covering the stock, but Darren's on leave. So for Capital DC recently, it's out of the STI index. Yeah, so like some big funds, yeah, is actually like not able to enter, and also is top 10 and 6 defaulted. But the revenue contribution is less than 2%, so the effect is pretty marginal. And also, since Zixin is the third-party operator, so Capital DC is actually able to list out to the end user directly. But of course, like that will cause some downtime and some cost on that. There's another question on Manulife. Wait, sorry, let me. Oh, has there been a recent re-rating of Manulife rate to buy? Why? We don't cover Manulife, and yeah, so there's no update whether it's a buy or what recommendation. But Manulife is severely affected since the office leasing sentiment in US is not very good. And yeah, Manulife is currently has a gearing of around 49%. Yeah, which effect is lending and cash flow situation, and also like is partnering with Mary on strategic review, and also is going to carry out equity fundraising, and Mary is going to subscribe more than 9.8%. Yeah, and we don't have any recent change in the recommendation. Yeah, that's all for me.
Yeah, okay. Let me just take this countries with much lower currency value manage to price the food much lower than Singapore, where our Sing dollars were. In reality, we are paying for the rentals here rather than, yeah, in a sense, there's some validity to that. So if you notice the way MAS, they always focus on core. So core is actually excluding transport and accommodation. Again, I'm not sure why. I mean, we can also argue. I mean, doesn't mean we don't like rent, like you said, rent or place to stay isn't important. But anyway, so if you look at the MAS, that's the accommodation is growing only at 5%. I think we all know how high rental is. So it's not for me to judge whether the reading is correct, but the accommodation, according to the stats, is only up 5%. So maybe that's how that's keeping the inflation. And anyway, even if it goes up from MAS core CPI, they actually exclude accommodation, rightly or wrongly. Not to say that having a roof over your head is not important, but that's how they exclude it. Yeah. Yeah, but the pricing, like you, so you are paying for rentals here, but the rentals isn't part of the accommodation isn't part of the way they compute. Yeah. And even if they did, apparently it's quite not that strong. It's only according to the CPI data, it's only up 5%. Okay, I guess we have our own views on that. Do you think GokuLand has the vision and expertise to do a CLI style revisioning? I think most developers want to go that route, even CDL and so forth. But you need scale to become like a capital land investment. If you're so small, then you even if your commercial properties you strip it out, you only have maybe one REIT. So it's not easy to replicate what CLI is doing. I think everybody wants to grow up and become like a CLI because you can revalue yourself by just doing property management, which you are already doing anyway. So I mean, if you are like GokuLand, you manage properties, but the market doesn't give you any value. So you can create a separate business and a separate entity from your property management business. That means you can create a new market cap, a new listed entity from your in-house expertise. But if you don't have scale, then I think it'll be very tough. Because the market, if you only have 1 or 2 or 3, 4 properties, it won't be meaningful. I mean, not like CLI, I can't remember how many properties, but they have the skill to make it meaningful for investors to look at them. Yeah. Oh, but like what you said, I mean, everyone wants to be like a CLI, right? To have to be ascribed the value rather than have a discount to RNEV. Okay, I think we can move on to the TA ones. I think we probably more or less. Zain, you want to take over? Yeah, thanks.
Okay, thanks for. Let me just share my screen right now. Okay, so the first one is Maple Tree Pan Asia Commercial Trust. So looks like the current bearish trend is still continuing on from last week. We rejected off this uptrend channel over here at about 170. Currently, we are testing the support at 160 again. So let's see whether this support is will be able to hold. Current resistance likely to be between around 165 onwards. If 160 doesn't hold, then we could see maybe some further downside to maybe test this next support closer to 155 to about 157 over here. And next one is BRC Asia. So for BRC Asia, recently nothing much. It's actually just trading in a range over here. So resistance wise, still around 167, which was a previous support over here. You can see it became and once broken, it became a resistance. Then support wise, the range support is still around close to 160 to 161, which was previously a resistance turn support. Yeah, so I think still likely to continue in a range trading for now for BRC Asia. And for next one, CICT. CICT, today we hit this uptrend support line over here around 189, 190. So if this can hold, we could see some temporary bounce in this stretch. Then the resistance for now is around 193 to about 197 over here. which is the recent supports that we broke down. Yeah. Then if you go further up, there's also this downtrend resistance line acting on CICT as well. Okay, next one is Capital. Also for Capital Corp, last week we did a retest of this range breakout. So the uptrend is still holding, is still intact, as we found support over here around 655, yeah, which was this previous range resistance. So we're currently seeing a bounce. For uptrend to continue, we must see this support actually hold and do a rebound back over here. Current resistance could be between around this high at 683 to about around 693 over here. As for CDL range trading recently, you can see it tested near the support again around 670. So this low around 666 to about 672 over here. This range, this support must hold. If not, we could see lower lows. Yeah, but if you're able to hold here, then we could see some form of rebound to the current resistance zone around 685 to about 690 over here for now. If you do break 666, then the next support to look out for, it will be likely at around 658 over here, which was another previous swing low. Okay, then for UOL today we tested around 635 over here. So this is a confluence of two supports, one being the recent swing low, another one being this uptrend support line over here. So likely this point we could see some form of rebound over here. Then if the support holds up, then the current resistance likely to be between around 650 to about 665 over here, which is this support that we broke down from, as well as this support that we over here. And for Hong Kong land, still continuing on its bearish momentum, so we're still seeing it trending lower almost every day. So for now, hit a support region around 390 to about 395 over here. So if this hold, we could see some short-term rebound for the current resistance at around 4 to about 405 over here. But if you do continue the downtrend, the next support is likely to be around the next swing low around 377 over here for Hong Kong land. Yes. Then another one is DFI. So DFI looks like we broke down this key support around 277 over here after multiple tests and forming lower highs along the way. So for now, why still looks bearish. Current resistance will be this support that is being broken around 277 to about 285 over here. Then if you go down to see further downside, the next support could be between around 258. This previous resistance and a swing low previously. Okay, next one is capital land investment. Okay, so for capital investment, recent looks like we are testing this support over here again around 324 to about 327. So let's see whether this is able to hold over here for support for possible rebound, where resistance likely to be about 335 to 340 currently. If we can hold this as a support and we break through, then the next we could see maybe price come closer to about 310 to about 318 over here, which was a previous resistance over here. Okay, then next will be Delphi. I think Delphi currently still nothing much, still likely to trade in a range, as we found support from this swing low around 123 and price still finding resistance at recent support that go down at around 132, 133. So likely, I think the range over here will still continue for now, yeah, for Delphi. Okay, then for AEM, AM pulled back last week, back into this uptrend channel over here in blue. Then it currently finding support at around 353, which is this previous swing high resistance over here. Then for now, I think could use some range, could be a bit range bound for now. Resistance wise could be around 373, which is this swing high that previously and we broke through without able to find a support over here. So for now, this could be act as some resistance. 353 for now is a support over here. But if this can't hold, there's a chance that we could test the lower support of this uptrend channel over here. That is probably around mid 330s over here. Okay, next one is Yangzijiang Shipbuilding. Okay, so for Yangzijiang, currently looks like a bit range bound. Looks like managed to break out this 130 stubborn resistance and still holding over here. And currently today we are retesting the swing high from last week around 135. So about 135 to about 136 over here, likely still have some resistance based on this uptrend channel resistance. Also previously we also had resistance over here back in December last year. Yeah, so near term wise, there's some resistance ahead for Yangzijiang Shipbuilding. Even if we break through this, there's also 138, 139, the previous swing high over here. Yeah, so a bit of upside only for over here. And support wise, if we do come back to do a range trade, then 128 to 130 will act as the current support for Yangzijiang. Okay, next is Prime US rate. So for Prime, I think currently still consolidating for now. See, the support is around 195 to about 20 cents over here, and there's this downtrend resistance line acting on it over here currently. So for now, current resistance could be around 22 cents to about 23 cents over here. But if we're able to see a breakout, then we could be able to test maybe around 24 to about 25 cents over here. Still trading in a very tight range for Prime USD. And then next for Keppel Pacific Oak, still trading in the range for now. So current resistance still likely be at 31.5 cents. Then the support is closer to about 28 cents to about 30 cents over here. So I think for now, still likely to hold in this range over here. And then next for LHN, LHN currently looks like it's consolidating for now with the drop off in volume. Could be consolidating in this potential triangle over here. So let's see how it goes, whether it breaks upwards or downwards. Yeah, then support wise could be around the recent swing lows around 33.5 cents to about 34.5 cents. Resistance for now could be around 36 cents onwards to about 37.5 cents over here. Still looks like some consolidation for a next move for LHN. Okay, then moving on is China Aviation. China Aviation still looking okay, the breakout. So following the breakout of this wedge over here, we tested the 99 cents resistance, currently pulling back. So but for now, I think we could find some support around the 92 cents to 93 cents region over here, which was this previous, there was this previous range resistance over here previously. So likely to find some support over here. If this is able to hold, then we could see a potential bounce up to test the current resistance around 96 cents to 99 cents over here. And, next one, First Resources. Okay, first resources looking bearish for now. Last week, we didn't manage to hold this support around 149 over here, and subsequently broke down. So for now, I think could be finding some short-term support at this level, which is around 140, this previous resistance, and there was some support over here. If this is unable to hold, then I think we could see lower lows, possibly around 135 if we do retest this uptrend support line over here. So this for first resources. Okay, next one is Olam. Olam currently looks like it's still range trading. After double bottom over here at 137, price has just been in a box over here. So current resistance still between around 143 to about 145. Support I will expect between 137 to about 139 over here. So I think likely to still continue a range trade for this week. Okay, the next one is Digital Core REIT. Digital Core REIT looks like currently still in a bit of a consolidation over here. You see a range being formed after we tested the resistance around 48 cents. So I think that will still continue unless we see a break upwards or downwards this week. Current support is still around the 45 to about 45.5 cents. Resistance is between 49 cents to about 49.5 cents over here. Okay, and next one is Semcom Industries. Okay, Semcom Industries following a pullback last week, we actually retested this trend line over here. So over here is still finding support as we bounce. Then currently looks like we're just sideways over here. Current support is around 536 to about 538 over here. Current resistance is about 548 to about 554. Yeah, so looks like a possible range consolidation for now, unless we see further breakout or breakdown again. Next one is Franken. So Franken currently pulling back after testing the resistance over here at 93 cents over here. So for now, if the pullback continues, the next support could be around 85 cents possibly, which is this recent swing low as well as it was a previous swing low also. Yeah. Then current resistance wise could be this 88 cents to about 92 cents over here for Franken. Okay, then for Citrum currently we are retesting this. We are near a possible some possible supports. First one being around the 12.4 cents mark, which is this horizontal level, which acts as a key support resistance area. So previously was a support, entering the resistance and back into there was a breakout over here. So currently we are retesting it over here, likely to find some support. And also around 12.3 cents, there's also this uptrend channel support over here. So likely we're able to see some form of bounce over here for Citrum if these supports hold. Then current resistance could be between 128 onwards to 133 over here. Okay, next one is Thai Bev. Thai Bev still holding in a consolidation range after the double bottom over here at 54 cents. So still looks like it's going to be range trading for now. Support is around 56 cents. Resistance is about 57.5 cents to about 59 cents for now. So I think that will still continue this week for Thai beverage, unless we see a break upwards or downwards out of this range. Okay, then I talk about the three local banks. First one, DBS, still looks like range trading for now. We tested the resistance last week, around 31.80 to about 32 over here, still finding a bit of resistance. For now, but the thing is that looks like there's a break outwards from this recent range over here. So that could be a bit bullish sign, a bit of bullishness. If you're able to hold 31.20, if you do a retest over here, then there will be some bullish signs. Yeah. So current support could be around 31.20 to about 31.50 over here for DBS. And for UOB, nothing much, still range trading over here. Yeah. So current resistance around 28.10 to about 28.50 over here. And then support wise, likely to see support around 27.60 to about 27.80 over here, this range. They are still in a very tight consolidation for UOB. Then for OCBC, it looks like last week we had a break outwards of this 12.50, but we weren't able to hold upon a retest over here. So the price has drifted back at this one support level around 12.30 over here. So I think for now, if this is able to hold, then we could do a slight bounce to maybe retest this 12.50 level again. But if we can't hold at this level, then we're likely to see come back down to this lower support around 12.10 over here for your OCBC. Looks like a false breakout over here that took place last week. Okay, then for venture, I think pulling back over here looks like a retest of this downtrend resistance line breakout at around 14.90. So if we're able to hold, then we could see some form of bounce to maybe test some resistance around 15.50 onwards to about around 15.70 for now. And current support wise, I think we could see support coming around 14.80 to about $15 for now, with this being the previous range breakout over here. And 15 is around this downtrend resistance line support over here. Okay, then for Best World, I think Best World currently still a bit flattening out from this downtrend. Currently looks like it's in a range for now. So support wise, I think it's able to hold around 177 to 180 around here. Then that could set up for potential reversal upwards. This support over here must be able to hold. Then current resistance wise is likely from about 188 to about 192 over here for this range resistance. Okay, then CapitaLand China. CapitaLand China, I think currently looks a bit of a range consolidation following this downtrend movement over here. So if you're able to hold this retest of the swing low around 97 cents, then that could set up for a bit of a range or a bounce upwards. Yeah, if you don't, then we could see lower levels being tested, which is around 96 cents as a next level. Then for now, current resistance is around 103 to 104, which was a previous strong resistance over here as well. And over here, it was a level that we broke down over here. Okay, then next one is Bao State. So Bao State, big picture wise, it looks like it's still in a range over here. Likely to continue trading in the range, I think. 85 cents is a key resistance because this was a previous support over here that broke down and there was a retest over here. So you do a retest, likely to expect some resistance also. But good thing is that looks like there's a possible break of this downtrend resistance line. If you're able to hold, then that could signal for some potential upside. And current support is over around 82 cents to about 83 cents over here currently. Okay, then UMS wise, I think currently looks a bit like a range consolidation. So resistance is still holding at around 109, 110, which was this swing high. And you can see, despite testing many times, it still weren't able to break. So it's a strong resistance over here. And support-wise, we are actually tested this 101 recent swing lows. And then around this, the lowest support is around 98 cents, I think, over here. Previous swing low, resistance breakout over here. So I think likely to continue in the range trade if we do touch the support levels over here. Next one is Raffles Medical. Okay, Raffles Medical, I think still, for now, still testing the 130 support over here. But one thing is that price has been making lower highs into the support. So that could be a sign of some weakness. If we can't hold 130 over here, then we could revisit a lower support of 127 over here and possibly fill a gap around here at 124, 125. Yeah, then current resistance wise is still around 135 onwards over here. Likely still in a range over here for Raffles Medical. Okay, then as for Genting Sing, still continuing on from its downtrend, lower highs being formed and looks like possibly a lower low if you do break this 92.5 cents over here. Yeah, so I think still quite bearish for Genting Sing for now. If we are unable to hold this 92.5 cents to 93 cents as a support, which was this previous resistance back in December last year, then if you break, then the next support level could be around 90 cents, which is this next swing low over here. Yeah. And then 90 to 90.5 cents was also like a swing high back in March 2021 as well. So that could be the next support level for Genting. Okay, next one is STI. For STI, currently, I think we are in a bit of a, currently we are pulling back, possibly in a bit of a consolidation over here, which is this, we could be bounded by this uptrend support line over here, as well as this downtrend resistance line. So a bit like a triangular consolidation. Volatility is getting lower over here. For now, support could be around, if this trend line holds, could be around 3170, so about 3,200 over here. Then resistance wise would be around 3230 onwards, so about 3270. So I think still in a bit of a consolidation for STI. Okay, next one is Jardine CNC, short and long-term support and resistance. Okay, I think short-term wise resistance you can see is around 3440, this range resistance. Current support will be around 3280 over here, these swing lows. When we turn to a bit of a longer term, the key resistance is closer to 3560 over here. Then for now, mid-term support is around $32, which is this likely this range support over here. So for Jardine wise, when you look at the short term and longer term, we're currently looking looking like a range pattern over here for it. There's a question by Dan. During your TA, can you explain the effect of volume in your TA reading? Okay, sure. So for volume wise, I think if we see large volume towards the key support and resistance zones, then that will be like more significant, as it actually means there's more changing on the hands taking place over there. And that could signify potential reversals that could take place if we do see volume tapering off and then lower highs or low lower lows or higher highs is not being formed, then that could be a sign of a reversal during uptrends and downtrends. Okay, then TA for Apple and Tesla. Okay, for Apple, I think the uptrend is still very well intact. And still trading very gently in this uptrend channel over here. And then last week, despite the market weakness, I think it just built up just kept in the range over here between around 184 to between 187. So I think for now, this 183, 182 to 183 likely still hold as support. Recent swing low as well is quite near this uptrend channel support as well. If it does a little bit of a pullback, resistance 187, but if we do break, we do see a break upwards, then we could possibly see maybe 192 if we do test this channel resistance in time to come. Okay, then for Tesla wise, I think currently looks like a bit of consolidation over here after the strong uptrend. Yeah, then support wise still around 248, which is this recent swing low. Resistance likely to be between 264 to about 275. I think for this week, possibly still continuing on in a range consolidation, possibly for Tesla. Okay, for CDL hospitality, sorry. I think currently it looks a bit like a range pattern over here. So the support over here closer to about 115, 116. And then resistance wise is still at 125 over here to about 127. Yeah, so I think that probably will continue on range trading for now. The next one is ICBC. Okay, so I think currently for ICBC looks like possibly in a descending triangle formation, nearing a support around 470 for now. Now, price has been making lower highs recently. Could be retesting this recent swing low at around 470 for some support. Then another support could come from this uptrend support line over here. Then we could possibly see around 460 if price retraces lower to retest this previous resistance over here as well. Sorry, can you all take the other questions first? While I try to find the counter for this.
I'll try this question. There's a question that says, generally when share price drops below private placement price, does it mean it's advantageous for retail investors to look? I would advise no. Yeah. It's still always good to go back to the fundamentals of the counter of the company and check out whether anything has changed in the recent in the recent period. So maybe if that we can help, you can always approach us to see what's our target valuation and any assumptions that might have changed during this period. So this is not a good way to by reading the share price against the private placement to make a decision to buy or sell. Yeah. So if we can help, please do approach us. Yeah. Thank you. I think there's a question on what is your ranking on the various segments in REITs now. I think the and speaking on behalf of Darren, I think we still think hospitality has some room to run, especially those exposed to the Singapore market and those has assets in Asia. These are the ones who will benefit from further reopening and more flights being added into this region. So hospitality is the top in mind. The other one could be the retail REITs, but this again has to be selective. Maybe focusing on those with Singapore assets could be beneficial, because we think the local markets here will still get an influx of tourist arrivals, and the suburban malls are still doing well, even though there's probably not much gain in terms of NPI, but these REITs will deliver a very stable yield for the REIT holder, so you can sleep well at night. So these two sectors are the top priorities, top calls right now. Thank you.
Okay, thanks, Peggy. So I think I'll continue. First one for Bank of China. Currently, I think still trading in the range for the short term. Still seeing resistance around 317 to about 320, which was this previous support over here. Then then we could see maybe price retest about 305 to 306, which is this previous resistance could act as a support over here, which is also this swing low. And then for next one for iFast. So for iFast, things still in a downtrend over here. We still seeing lower highs being formed. Then we need to see upon the retest of this previous resistance round 4 to 43, whether you're able to hold as a support for a possible rebound. If not, we could continue on the bearish momentum. Test the support closer to about 430 over here. Okay, next one is Ascendas REIT. For Ascendas, I think currently looks like in a range for now. After breaking down of this uptrend support line over here, resistance is still around 276 over here. Then while support is I think around 262 over here. So for currently price could be trying to retest this support over here again for Ascendas REIT. Then for Maple Tree Industrial, The Mapletree Industrial also similar. After breaking down of this uptrend support line, forming a range over here. Yeah, and currently looks like we're able to retest this recent swing lows around 217 for some support, while the resistance is closer to about 226 to about 228 over here. Okay, next one is Hang Seng Index. Okay, so for Hang Seng wise, I think currently looking quite weak. So during the rebound wave over here, we actually hit into this resistance zone close to about 20,100 to about 20,300. Then upon the pullback, we can't manage to hold around 19.5K, which is this range support level over here. So, and then price just dive downwards. So for now, looks like the support is between there could become current support around 18,800 over here, which is this previous swing low over here. So if you're able to hold, if you're able to see some form of candles that hold at this price, then we could see a possible rebound to possibly around 19,300 to about 19,400 over here. But if we can't hold, then likely we continue the this bearish movement downwards to possibly retest the swing lows around here, which is around 18,000 to about 18,200 over here. And then for Cisco Systems, recently retested the swing high around $52. So currently pulling back for now. So could be retesting this short-term range resistance previously around $50 over here. So let's see whether we're able to hold as a support over here and rebound. If not, then we could be testing lower support levels, which is around $49 over here. Okay, the next one is United Health. So for United Health, currently, I think looking a bit bearish because after it broke down of this range over here between around 475 to about close to 500. Then there was a retest that took place and currently looks like a bit of rejection over here. So if this holds, then we could see maybe a bounce lower to retest some closer support around 460 over here. Yeah, that's for United Health. Okay, then for NVIDIA, currently I think still pretty strong. After the breakout of this 419 swing high, currently looks like we're just forming a range over here. So as long as this price is still holding up, I think the trend wise is still pretty good for NVIDIA. Yeah, then current resistance is closer to about around 435 to about 439 over here. And for EMD wise, I think currently there could be some support around 108, 109 over here. Because previously this was a swing high resistance back in June last year. There's also a recent resistance in May, and after we break out, and currently looks like we are doing a retest over here. And Friday we ended with a doji candlestick. So if you're to see follow through bounce upwards, we could see short-term bounce to possibly 114 to about 116 over here. With 116 being a rather strong resistance now because this was a strong support over here that we broke down recently. Okay, then for BABA, I think it looks like it could be gonna bring down a little bit lower to retest this downtrend resistance line, this blue color line. That could be about at 83, which is also these swing lows over here. So if we're able to find some support over here, then it could possibly do a rebound over here. And short-term resistance is could range from about 88 to about 91 over here for now. Okay, then for Tencent Holdings, Tencent Holdings looking a bit weak for now because upon the retest of this resistance previous resistance around 345, we weren't able to hold. So price went lower, could find some support next around 325 to about 330 over here, which is this. There was some support over here, and there's this swing low support over here as well. So this range could be able to find some support for Tencent in the short term. Okay, next one is Great Eastern. For Great Eastern, looks like might be trying to do a retest of this previous resistance around 1740. So currently, price is currently just trending downwards after we hit about 1830 over here. Yeah, so it's a possible retest for some support. There's also a price gap over here as well. So over here, I think price could trend a little bit lower before it finds a support for a possible rebound. And then next is Adobe. So Adobe currently, after the run-up, currently looks a bit of a consolidation over here. So support is around close to about 473 over here. Then resistance is currently about 492 to about this high at 518. So I think that will probably continue for now. If this support is able to hold, then we should be able to see some form of bounce to do a bit of a range consolidation for Adobe. Okay, then last one is Bank of America. Okay, for Bank of America, currently, I would say looking a bit bearish because during this range last week, after a few times of having higher lows and higher highs, and we weren't able to hold this $29 mark, and we broke down last week to try and retest these lower swing lows over here around $27 again. I think for now, there could be some support around here, around 27, which is this swing lows, as well as there's this uptrend support line holding as well. So over here, we could see a little bit of bounce over here for Bank of America this week. There's also a question, when there's a gap up, will the chart come down to close the gap usually? I think in the short term, probably not, because if there's a gap up, means there's a strong bullish momentum currently, then I think price is likely to trend higher in the short term. But in the midterm wise, there is a chance to come down to close the gap. If there's some form of retracement, pullback to it. Yeah. So I think that's my answer to this question. Yeah. Thanks everyone for today. I'll now pass on my time to my colleagues if there are any closing remarks for today's session.
Yeah, okay, thanks, Zane. There's one last one here from the chat. We just try to address all as much as we can. How would the extension of the US debt ceiling affect the US stock market from a quantitative perspective? The impact will be minimal. So just to give a bit of flavor how this debt ceiling works, very, very unusual. But so the debt ceiling for the US is 31 trillion. So instead of saying that they're going to increase, so they're going to remove this. They're going to suspend the ceiling, which is effectively raise it, but you cannot say you're going to raise the ceiling unless you won't get elected. But it's minimal because if you look at the US budget, they spend about the US government spend about 6.5 trillion every year. What they talk about is only around 2 trillion. The rest of the 4 trillion, they cannot talk because that is non-discretionary. So that is like your Social Security, Medicare, so you cannot touch that. Otherwise, again, you won't get elected if you try to stop Social Security. So all they talk about is just the discretionary. So there's a discretionary, which is defense spending. That is about, I think, 1.82 trillion. For that, they are only going to cut it, some estimates only 50 billion or 80 billion. So it's not going to impact the stock market much or the quantitative. So it's not going to move the needle much for the whole US economy, because the most important is the non-discretionary is still going to run. So most of the budget is still going to run. So they're still going to run into huge deficits because the ability to control the non-discretionary, which is social spending, the 4 trillion is still running. So they're only playing around with some small numbers here and there. So we don't think it's going to impact the US market that significantly. It's only 50 billion out of 6 trillion, so not much. Okay, anyway, with that, I'd like to thank everyone for your questions and for your time. If you do have questions, just post it in our P3 community. With that, I'd like to thank everyone for your time and hope to see and hope everyone have a good week ahead. Thank you, everyone, and have and take care. Bye bye.